Morning, guys. It's Chris here at London Close. It's 5:06 in the morning in Honolulu, Hawaii, and I've got my nice little energy drink here to keep me up, get me going here, and get me focused. So, um, kind of running down what's going on right now. I mean, obviously today the big news is OPEC back and forth, but Um, kind of before all the OPEC headlines, the dollar moderately softer. Weekly claims were pretty bad. So just to kind of give you the stats on that, um, uh, 6 million, I believe, 6.6 million unemployment claims, which is obviously the highest ever, but it's down a little bit from the previous report. But the anticipation was 5, so it was worse, definitely. Unemployment rate in Canada, 7.8%, so that was worse than the forecast of 7.4%. Unemployment change, obviously, way down as more people are unemployed here in the U.S. and Canada. Consumer sentiment was down. University of Michigan core PPI was up, but that I believe is February. Or might be March. That's month over month, so I believe that's March still. So that's kind of what we have going on in terms of updates. Euro kind of trading sideways as the markets are kind of awaiting progress on coronavirus and kind of what they're going to do to support the economies. The pound is kind of just sitting there. Same thing with the yen. Aussie is a little bit flat. Kiwi as well. Commodities are not super strong, obviously, right now, as people are still real wary with the unexpected spike in coronavirus cases in the UK, New York. So also, I believe Tokyo had a spike up there too. So, the pro risk bias, it's extended a little bit more. The Aussie and Kiwi are the stronger currencies today, but that's more of a sentiment move, I would say, than a fundamental move here. So crude oil has gained a little bit, but it was just announced as we were talking right now that the cut was for 10 million barrels per day. So there was talk that it could be 20 million, and that's what I think was propping the Canadian dollar up a little bit. But 10 was kind of what's anticipated. So I think that's mostly priced in, and that's not going to bode well for the Canadian dollar, because I think once again the spike up was already anticipating that. And then the other part of this is, they could cut all they want, but there's still no demand worldwide. So that's going to obviously limit the amount of movement that the oil can go up. I mean, really, if there's no demand, it doesn't matter if you cut it 10 million barrels per day. Everyone's full. No one's using anything right now, or barely. So that's kind of my take on the whole thing here. The other than that, I mean, European equity markets modestly higher. People are starting to feel like there's light at the end of the tunnel. Signs social distancing are having a clear effect on the spread of the virus. I'll talk about that in a minute. I kind of have my own opinion on it, but I don't obviously each country is kind of doing their own thing. I'm curious to see what Sweden's doing, because Sweden, aside from social distancing, they're not doing any stay-at-home orders or shutting down any type of business. I'd be curious to see what their spike and their over-the-hill decline on the COVID-19 spread means, and how fast they're going to return to normalization compared to the rest of the world that are doing pretty much what China did in some way, shape, or form. It's a little bit more draconian. So that's pretty much it. Powell spoke, just talking about Fed policy easing and liquidity measures. So That's kind of what we have going on for today in terms of markets. Um, Once again, this OPEC deal is, the kind of thing to watch for. I think there's still going to be some volatility with it. Um, so just want to share with you the trade I had going on from a couple days ago. So this is the Kiwi Swiss franc. As you can see, we got in the entry here, which is 58.07. It is at 58.55. This is on the 4-hour chart, so this is something that's going to take a little longer to play out. But it's a very good risk to reward ratio, 3.08 to 1. And we're kind of in the money now, so I'd be hesitant to let this thing turn into a loser, but don't know if that'll be the case. Want to check out the euro yen today. I think the euro has got a lot of room to move on the US dollar, and I think that'll prop it up against the yen here. So you can already see it's running into some resistance. This was the volume most traded level, and you can see it went on for quite some time here. So this is the 30-minute chart. I would anticipate a move down to this level if it can make it down there. I mean, it's already kind of getting stopped up here, even above, but I'd be a buyer maybe at 118.50. So we'll put in a limit order here, and I think we're going to get a nice little reward to risk ratio on this one. But so the euro, once again, equities are up. I believe the euro's gone as far as it's going to go against the dollar in terms of negative. So I think there's really upside risk, not downside. So I would be a seller, maybe below this little second level here. I don't want to get caught up in a little spike. So let's go to 118.03, and the target we're going to make is 119.25. So to me, that is a nice bounce up to the 119 level, but it'll go past the 20, and then I think encounter some resistance there. Make sure that the reward to risk is worth our time. 1.53, so not spectacular, but a decent move on the usually I like a 2-to-1 ratio. Maybe we want to get it in a little bit lower. Let's see if we can get that down to make it worth our time. Maybe we get it to like this level here, right where the volume really starts building up. What does that put us at? 2.2. I'd rather do that. To me, you want to really stand firm in your 2-to-1 reward to risk ratio here, just because once again, the markets can do anything and news hits you all the time. So there's a high level of probability, but anything can happen. So making sure that your odds are proper is, to me, important. And I've learned that the hard way over the years. So we'll limit at this level right here, and we'll see if it hits. Hopefully it does. But that's kind of what we have going on for today. I'll keep an eye on that Kiwi Swiss franc trade. I think, once again, the Asian countries, the countries of the East, New Zealand, Australia, they're further ahead in this whole thing than we are. So I think the recovery is going to be faster than we will also. So especially with Europe getting hit hard. And Switzerland has seen that spike up in cases. So I think the Kiwi is a better play. I'm still kind of hanging my hat on that dairy price increase, which that's the only positive economic news I've seen in any country in probably the last few weeks here. So, but one thing I want to talk about, and then I'll kind of let it go here and open up to any questions you guys have via chat. But reward to risk ratio. So why do you want a 2-to-1 compared to just getting in, and why is this important? Well, the thing here is, once again, trading is all about probabilities, and the more information that you have, it raises the level of probability that a trade or price will go in the direction that you think it will go. But this is the most liquid market in the world, and there's so many players, and anything can happen. So even though your trade is set up with a higher probability than it is losing, capping that on top of what I call law of averages, where essentially you only have to win 2 out of every 5 times to be profitable. That takes a lot of pressure off of yourself to be right all the time. And by doing that, you get used to losses, because losses are going to happen in the market, and you have to get used to that. This is not a win all the time game. This is a win more often. This is a profit game. This isn't a win all the time game. And that's a fundamental change that you have to get in your heads. Is it's not about winning all the time. It's about being profitable. So a good best practice that I would suggest is this process, or whatever Nick teaches you in the courses. Give it a fair shake for 20 trades and document all 20. Don't look at whether you're winning or you're losing any of the trades. Wait till you're done with 20 and then see what your profit looks like. If your profit's down, then the strategy is not a good process, and you need to change it up. If you're profitable after 20 trades, that's, I think, a fair amount to judge this as a success, and then I would increase it up to 50 trades. So 20 trades are profitable. Let's go to 50 trades, and then where are you at in 50 trades? If you're more profitable than you were at 20, you got something here. Then bring it up to 100, and 100 would be kind of like the final benchmark. If you get to 100 and you're more profitable than you were at 50, that's what we call a career here. And that's when you got it, and you can make money from the markets consistently. And 100 trades, if you can go through 100 trades consistently, you're ahead of 99% of the traders out there, because most people can't get past the emotion and the ups and the downs of trading. So that's why you want to tilt all of the probabilities you can into your favor. And that's where, once again, technicals are a part of it. Fundamentals, or what we call fundies. Me and Nick joke all the time about that, fundies. But what's going on in the markets? What's moving price, right? And then technicals are how is the market interpreting price, or how's that interpreting the fundamentals, and where is it taking it? So by doing those two things, and then having a proper reward to risk ratio, you're lining yourself up for success. It's like, I don't know how many of you guys golf, but if you're putting, you line up your feet, you line up the ball, you aim, you take a couple practice swings to kind of get the tone, all right? And there's not a guarantee that you're going to make the putt, but the probability is higher than if you just walked up, and hit it, didn't aim, didn't do anything, right? Because you're creating a process of analyzing the markets, and by going to that 20, 50, and 100 trade benchmark, you can make fair assessments on your return on investment, and that's called ROI. Okay, so you want to treat this like a business, because it's your money. You earned it, and it's probably hard to earn it. So treat it with respect, and by doing that, like I said, you'll increase your money. So that's my soapbox moment of the day, and let's see how this euro yen trade plays out. Once again, it's 58 right now, so it's starting to run into some volume here, but we're going to target down here, and let's see if it gets down to the 118.42, and we'll go from there, guys. So mahalo, thank you for joining, and I'll be on chat for the remainder of the hour if you guys have any questions. All right.